All right, good afternoon. All right, so I just had a great success trading XRP. I shorted it. Let's go over here, look at these. All right, we got 99%, guys. 99% are long. 99%. All right, so check this out. It's on a 1 hour. All right, I'm on a 30-minute chart. All right, clearly we see we got a nice little liquidity sweep. We had, this is the previous day high, and this is the previous day low. All I did was just use my Fibonacci retracement to play these levels, and I got out at 61%. All right, I shorted this, got in short around the 23%, got all the way back down here to the 61, as you can see right here. All right, that's why I got out the trade. This was a perfect textbook trade using the Fibonacci retracement tool and using sentiment. All right, if we go to the 4 hour, we see that even on the 4 hour, we are at 92% that are long on the 4 hour chart. It's too much, right? So we want to take a contrarian stance. That's liquidity. All right. Let's see what Bitcoin is doing right now. All right, so Bitcoin's come back down into one of my target zones as well too. All right, let's take this back off. Oh yeah, so same. Playing these levels, but let's go back, see what Bitcoin was. All right. So 4 hours, 93% alone. On the hourly, we got 89. Still a lot, right? Well, you're looking at short. All right. These are all the people who are going long. We are collecting. So if you're looking to buy, that's a lot of people looking to buy. That means that you have a market maker who wants to sell to you. So if I got a lot of people who want to buy, I can sell. And then when you have a lot of people who want to sell, that's when you buy. Play this game all day, right? See what's going on. I guess we could look at Solana, see what happened. 95% on Solana. All right. So we were looking to get up here, but we didn't. Which I still believe we're gonna try to fight to get back up here, but we're gonna pull that right now. Same thing. We got this nice little pull down. Now, let's look at something. Bitcoin actually broke the previous day low. All right. Now, because of that, we still want to look for a liquidity sweep down here. All right. And so this is going to be the origin, meaning that this is where the drop actually, really, really rolled over. And, it's based off of this right here. This is basically one the major last candle before it even left out of this zone. That was the catalyst, right? So what we want to do is we want to now measure, all right? We want to look for key price action, all right? We're looking for price to cover this 23%, all right? And then come back below, and then we're going to aim to get back up here to the 61% area or the 50, so between here. So this could become a counter trend trade, but in order to do that, we need to start seeing some of the liquidation metrics start to shift. So it's continuing to drop. So we want to see this 89 start to drop a lot. So we could get into the 70s, maybe even the 60s. Then it's going to start to change and flip back into our favor. When now you're going to have more people who are going to be short, right? Because they see this drop right here. They see the break of the previous day low. Typically draws in breakout traders, and they potentially could get trapped. So they got to keep an eye on that. All right. As it stands right now, we're not doing anything. So we need to see some key levels, all right, that are met. Also, you can do a engulfing bar strategy, right? So right now, if you were utilizing that, okay, you have this green candle just engulf this red. If you weren't to take this particular type of trade, you would enter in and your stop loss goes right below here, below the candle that has gotten engulfed. And you just basically look back at market structure. You'll take the trade back up to this area, or you can use the Fibonacci retracement levels like I just showed you. But that's essentially how the trade works. So look at this. Right here we had red and a pin bar come in, but then we had this green to engulf. You would have did the same thing over here. You're in the trade. You're going to put a protective stop loss. It's going to be below the candle that was engulfed here. All right, look back at market structure. You take the trade up, and so you exit out. So this is a legitimate strategy too. It doesn't require no fibs. It doesn't require anything. It just pure naked price action charts. All right, we're alone. Stop loss here. We're going back up in the structure. Keep it moving. If price comes down, knock you out, it knocks you out. You're out of the trade. Just keep it moving. All right. You got one right here, red. All right, and we engulf. Stop loss here. Now, even though we're trying to shoot here, all right, we get to this point, but then we roll back over. Your stop loss either could have gotten hit while you kept it here. So if you had something like this, your stop loss below here. If you left it alone, it could have been hit. Or, all right, you're in profit right here. And so you could have did what? I'm sorry, let's do this. Instead of leaving it, you move your stop loss into profit or break even. So if price comes back down, you get hit, it's either break even or you just take a small little win. So that can happen. Now we were aiming up here, but we didn't get there. We pulled back, but we can play the same game again. All right. What are we doing? We could do a green, eliminate a green. So right here, boom, we got an engulf. Now, this is a little, some people say, well, that's not really an engulf. So you could use this one. It's definitely an engulf, right? So this bar engulfs. So you can engulf the same color. Stop loss, what? Below here, the counter that got engulfed. All right, where is your target? Okay, still up here. Boom, you're out of the trade. So you see how engulfing can work as well. All right. And of course, we just looked at some of the liquidity sweeps. But guys, just keep it simple when it comes to trading. Like I said, I use sentiment for the most part. I want to see where all the traders are because that's typically liquidity for the biggest players in the market. All right. Liquidity is all over the chart, but they're also a lot clustered in some areas, right? Boom. We play those. Okay. Let's look at one more, and then we'll call it a day. Let's try Cardano. Hadn't looked at that in a while. All right, so right now 79% short long, and 79% on the 4 hour. So let's look at ADA. And we could see the ADA character has been changing. So let's look. Yeah, but all of them gonna, for the most part, gonna look similar, the same, right? Like I said, breakdown, boom. All right, so this is the previous day low. All right, I'm expecting that this could be a sweep coming in, and we could push back up. This will be a great trade to look at. We got an engulf that's happening. Look like right here, and we have stop loss that could be put right here. Boom. Look, get out structure. So he said where we're at in structure. I mean, if you want to use supply and demand levels, all right, take the what? Top of the candle to the bottom of the previous candle before price left out the zone. You take trade back up into the zone, either at the edge, 72 cent, in the middle, whatever. All right. It's also what we call a fair value gap. All right. It's a nice little strong candle came down. Could have some unfilled orders that's still sitting up there as well. And you got one over here as well too. So price could easily sweep back up here and touch these levels. And we got fair value gaps down here as well too. So keep that in mind. That price typically want to try to come back and collect some of them unfilled imbalanced orders down there, right? So yeah, just continue just working on that. You know, you can use these techniques on any time frame. Of course, the bigger, the more bang for your buck for the most part. But you can do the engulfing bar pretty much, like I said, on any time frame. All right, let's say you came in the market right here. All right, you got your levels drawn up. All right, which way it want to break? It broke down. It looked left. All right, that's your market structure. All right, you get out of trade there. Now you may be thinking, oh, that's not a lot of movement. Well, we're using derivatives too. So, you know, if you're using 5x, 10x, that changes the game, right? So if I can get in here, take it down to here, all right, that's 3.92%. You do that times the 7x. A lot of times I play with a 7 or 8x. You know, that's almost 25 something percent. You know, let me do the math. It was 3.92% times 7. That's 27%. So you make 27% gain on your money just off of that, right? Look, right here, you try to get in, you do good, you're up, but then it come back. If you leave it alone and get hit, but if you move your stop loss and the profit, you still good. But we talked about this before, all right? You still can look to play, you know, to the upside. You want to start seeing some green eliminate, and we start to get a little bit right here. All right, boom, we engulf a little bit. All right, we come back down, but this one fully engulfs. So even if you was trying to do this one, so your stop loss is below here. Keep it moving. Look at this engulf, right? Boom. Stop loss there. And of course, if you could have caught this, you're going back up in the structure, you'll be out. Now look, this blasted through all of this. It came all the way up here. I'm not saying I wouldn't have held it that long, but you know what I'm saying? But yeah, you see all over the chart, you can do engulfing bars. You can marry that with sentiment. You know, you really can have a great trading plan just by doing that. Don't make it complicated. Keep it simple, guys. Hit the like button, subscribe. It's your boy E. White. I'm out.